Hello viewers, you're welcome to the technical analysis for the week ahead. All right, if you know you have not subscribed to my YouTube channel, please do subscribe. It won't cost you anything. It's just a click, fill in your email address, just for YouTube to know that the person that is subscribing is not a robot. All right, you just need few of your information and that's all. All right, please do subscribe to my YouTube channel. If you are getting value from it, please subscribe. And apart from that, if you don't even have interest in forex trading, you can suggest it to somebody else that has interest, maybe a family member, friends, and just like that. So please pause the video, subscribe. Thank you so much. Today, let's dissect the technical analysis for GBPUSD and gold USD. First, let's start with the GU. All right, that is the GBPUSD. Now, we know that once a price action creates a high, all right. Now, if there's a current cycle, all right, what do I mean by a current cycle? For example, if a trend is bullish, price will go up, get to a point, it will create a high. Then price action will now start to pull back, as in going bearish. And before that happens, something that we call market shift. Price will do that. Price will create a market shift before it starts to before the price will start reducing, or rather before price will start uh, uh, coming bearish. When it's bullish, price is increasing. When it's bearish, price is decreasing. So before that change happens, price will create what we call a market shift. All right. So at this point, because of time, because we need to analyze two pairs. So we've been bullish all this while. Price got here, created a high. I want us to start from here. Created a high, and I told us for before you can do your analysis, go to a higher time frame to check, to know the overall direction of trend. All right, I've been able to ascertain that the overall direction of trend is bullish. We are bullish, and price is now coming down. All right, price is now coming down. If you look at this point, price created this. All right, because once you are able to identify the overall direction, then you will now stick and filter out the current trend. Is the current trend, that is where you will find the opportunity for you to trade as an intraday trader. An intraday trader simply means you take position on a daily basis, close out your position before the close of business that day. But don't forget, trading is 247, 5 days a week. All right. So if you are trading a particular session, you take position before the session closes, you close your position. So that is what we mean by intraday trading. So now price got here and it created a high. All right. Then he came down, created a higher low. All right. Because of time, he created a higher low. Then price came down, broke structure, created this low, it pushed back, all right, created a base and sold again and created a low, all right. When it got here, what happens? There was a market shift. Follow me, guys. This is how to analyze market so that you now know where you are. It created a market shift. After breaking structure to the downside, all right, you see, when it got here, because this point here was where market broke structure to the upside, this place is what a market shift. He created a high, then as his planning, as it starts coming down, it created a market shift. So it was bullish, now it becomes bearish. All right, all right. Now, so market shift happens here. All right. After the market shift, there was what we call little consolidation here before price broke out to clear out this place. Then it created a lower high. This high is higher than this, a lower high. All right. Then it now started coming down again. It broke structure from here. It pulled back, broke structure from here. So that means price has been decelerating, coming down. It now created this low. After the creation of this low, it now here it gave us what we call market shift again before price starts going up like this. All right, like this, like this, like this, like this, like this. This is the last break of structure here. Then price came down, took out this last break of structure, this last support level. We say market shift again. So it has created another higher low, another lower highs rather. Now it broke from, it now created a market shift, came down here and created a low. All right. Now price pulled back, created this high. But if you follow uh, order flow, this push supposed to take out this high. Since it did not do that, we say fail to create a high. That means price is now ready to start coming down again. Since this leg failed to take out this high, we say that this point here is a weak low. This guy that broke this level down that gave us a market shift is this leg now, this high is a strong high. That is why you see we titled weak low. The other one is a strong high because he has done his job by creating this low. He has created this low, but this low failed to create a high. For this level to be a strong low, it's supposed to violate this high to create another high. But it failed to create the high that is above this high. That means is a weak low. So price got here, it came down, and it stopped here again, the same level, giving us a kind of a double bottom. All right, giving us a kind of a double bottom. But don't forget the other flow. This guy failed to create a low. That is what it means now. He failed to create a low again. Now, price started moving to the upside, then it now stopped here. This is where we closed last week, Friday. Now, to make it clear, this level is where we are trading. This is where we should be trading this week. We have the high, then we have the low. All right, we have the high and we have the low, and this is the leg we are playing. I hope we are very clear because at every point in time, you should know where you are in the market and what is the price, what is price action giving us right now, based on structure, price action has violated this last break of structure and it has given us a market shift, meaning that we are the bearishness has resumed again. But this guy here failed to break this low. He failed to take out this low. He then created a form of double bottom. But based on our experience, if a level fails to create, what happens? That level will now be used as a liquidity. All right. So there is a potential liquidity here. All right. There's a potential liquidity here. So we say that this place, this very point here, there is a potential liquidity. What does that mean? This push will come up, take out liquidity here before price will start coming down to violate this weak low. As we all know, we trade from the strong leg to the weak to take out the weaker leg. Now, what you need to do next is bring out your fib tool, all right, place it at the top, drag it down to this level, then you drop. Now, at this point, we are expecting price to push up to the premium level. The premium level is between anything above 50% is the premium level. Anything below 50% is the discount level. When you are bearish, you allow price to push above uh, 50% before you can sell. When you are bullish, you allow price to retrace below 50% before you can buy. So that is how it is. So at this point here is a potential uh, liquidity. So we are expecting price action to, now that it's here, we're expecting price action to push up a little, clear this point, then sell. Sell to take out this low. And if you look at this point here, all these lines you see, they are what? They are what? A psychological number. All right. Why price held here is because here there is a psychological number. So the opportunity that we see here presently is that price is making a high, a lower high. It needs to create another lower high before price will sell properly. All right. You see, he sold, he dished out a sell here, but he did not take out this low. That means he failed to create. Failure to create a low now means that this is a potential liquidity for price to grab, push to price will grab it, tap into a premium level, then it will now sell. All right. So this will facilitate the push to the upside before price will sell. But however, we don't control the market, we follow structure. If buyers are much than sellers, price can go above, break, take out this high, all right, take out this high, even get up to this point, then we'll pull back, retest this high, then we'll start going higher. So that is trading for you. But based on structure, we have the market shift. It has given us the market shift. Now we are expecting price action to create a lower high before it can sell. So that is that for GU. And mind you, once you place your trade, is your stop loss, the amount of the stop loss that you gave is what will determine your lot, the lot size that you are going to use. Once you enter your trade, check your, before you enter your trade, check where you put your stop loss. Like for example now, if price get here and tap me in, for example, if price get here, that means my stop loss will be 37.6. Based on that, I will now know the lot size that I'm going to use. But if price now eventually maybe it gets to this point, that means my stop loss will be bigger, then I will reduce my lot size. All right, so that is how you apply risk management based on your lot, based on your stop loss pips. All right, thank you so much. Then let's quickly, so as far as I'm concerned, I'm expecting price to push up to this point. If he holds, then I'm going to sell. But if it breaks above, then return. If it breaks above, I'll wait for a pullback to retest the structure, then I buy. So that is how we trade. You trade what you see and not what you think. But based on the structure, we are anticipating that price will push up to this point, all right, the fib level, the premium level, then sell. Okay, that is that for GU. Then let's analyze gold first. First, like you go to the higher time frame to ascertain where uh, the direction of trend, okay, to ascertain the direction of trend. That I have done, and price has been bullish, all right, it's been going up. You can do your findings yourself, it's been going up, but when it created this high, it started coming down. Then after that, it gave us what we call change of character here, all right, change of character here, and again, it started pushing to the upside. It gave us a high here. It gave us a high. It gave us a lower high here. All right. Then price started coming down. All right. There was a change of character here or market shift. Market shift right here. A market shift here. It gave us a market shift here. All right. It gave us a market shift right here. Then since then, it's been breaking structure to the downside. You can see it's been breaking structure to the downside. All right. So for you to understand where we are, if you look at this level, this is where we are trading. This is where we look for our opportunity. All right. This is where we look for our opportunity. This very point. All right. So at this point now, what we need to do is wait for price to push up to a premium level. Wait for price to push up to a premium level because you see this point. This is the last break of structure, which you can see. This is the last, let me remove this. This is the last break of structure after this market shift, because this is the leg we are trading on. After this market shift, this is the last break of structure. Price pushed to this point. It did not take out this high. It pushed, it did not create another low. All right, failed to create. It did not create another low. That means there is a potential liquidity here. So what we need to do next is take out our uh, this, put it like this. We are expecting price to push up to this level. We are expecting price to push up to this level, all right, to push up to 15%. We're expecting price to push up to 15%. 50 or 60%, at least 50%, then what we need to do is let price go like this, push, clear this point, then price will come down. So thank you so much. and have a blessed week. God bless you.